One of the fastest ways that traders destroy their discipline is by convincing themselves that they're missing opportunities. Because the fear of missing out, FOMO, is so dangerous in day trading. It makes you want to chase entries. It makes you ignore your plans. It makes you enter late. And it can also make you enter early. And it also makes you increase your risk. And usually, by the time you entered, the move has already happened. So welcome back to the next episode of The Trader's Mind. This is a series where we're breaking down the main psychological factors within day trading to help you improve and become profitable. And my name's Brandon. I've been trading for over 4.5 years and I trade full time in Dubai currently. And today's video is all about the fear of missing out. Because honestly, a lot of you aren't losing money because of a bad strategy, bad setups, or bad analysis. You lose because your emotions make you abandon your discipline as soon as the market starts moving fairly quickly. So to start the video off, what is FOMO? FOMO, or the fear of missing out, is basically emotional urgency. You feel like that you need to be in that move. You need to catch that big move because the market's moving quick. Even when that doesn't fit your setup, it doesn't fit your strategy. And that's important because the problem isn't the opportunity. The problem is impatience. You will see price start to move fairly quickly. So you will abandon your discipline, you will abandon your patience, and you'll try and jump in to catch that move. So your logic has disappeared. And usually when you go to actually enter into that move, the fast moving price has already done its thing. It's already moved. You're already too late. Price starts to reverse and go down as quickly as it came back up. And because you didn't manage your risk properly, because you stopped following your process, usually it ends up in huge losses or a blown account. And to paint a picture of FOMO, FOMO is basically you're standing there and you see a crowd running towards something. And instinctively, you start running as well, but you have no idea what to. The human mind, it fears exclusion. So you want to jump in, you want to go as well, even though you have no idea what's happening. That is FOMO, and that's why it appears in your trading probably daily. You see these moves happening, you're like, whoa, why is this happening? I didn't think this would happen. I need to get into it. That is what is happening with your trading. So why do you actually get FOMO? How does it appear to you? And there's a few main reasons, but I'll go through the main ones for you. The first one is social media. With social media, comparison becomes so easy. You probably follow 20 or 30 or 40 traders on social media, and they're probably top of their game. They're also exaggerating what they do for social media, for the likes, for the following. But you think everything is realistic and you start comparing yourself to them. So if you see everyone you follow making 10K days, 20K days, never really having a losing day, driving Lamborghinis, living your dream life, you're gonna have that fear that you're missing out on all of that. So how are you gonna get there quicker? By taking more risky trades, by taking more trades, and by taking trades that do not meet your setup. Because you feel like the more random trades you're in, the more chances you have to make money to get to their level. So if you struggle with this, please just get off social media, unfollow a lot of the traders. Even though it's good to have it for motivation, of course it is. It's nice to see that what you're doing, it is possible to get the lifestyle that you want. But as soon as it starts messing with your mindset and it starts to make you go a bit crazy with your trading, that's when you need to have a real talk to yourself and be like, right, is this actually helping me now? Or is this destroying my trades? The second reason is having a scarcity mindset. You subconsciously believe that if you miss this one opportunity right now, there won't be another. And that's a scarcity mindset. You need to remember that the majority of the markets are open 5 days a week for about 22 hours. So there is so much opportunity for you guys to get in at. Your setups will appear. You don't need to get into these random moves. And I get it, they look quick, they look fast, they look like price is gonna go mental. And if you don't catch it, you're gonna miss out on something massive. But now you're not trading your setup, you're not trading your discipline, you're not trading your plan. You are purely trading your emotions and what you feel right in that moment. There's no logic involved. And the third reason, and this is probably the biggest one, is that you need action. And I get it. We've all been processed throughout school, college, and full-time work that you need to put more time and work in to get more money back. But that's not how it is with trading. Usually, the less trades you take, the more money you make. Because you need to remember, yes, if you're taking more trades, the opportunity to earn more is there. But the opportunity to lose more is also there. So instead of trying to get action every single moment because trading is boring, you need to slow it down, sit on your hands, wait for the setup. If you see price moving really quickly, but it hasn't met your setup, don't enter the trade. You need to wait for all your confluences to get hit. You need to wait for your setup to appear. If it doesn't, you leave it. And you know that you should be doing that, but you see the price go and you think you just want to catch it quickly. But more times than not, that will end up as a losing trade. And you need to accept that. And the most dangerous part about FOMO is that it's silent. You don't know it's happened until it's happened. So it quietly destroys your trading. It makes you start to enter trades late. It makes you start to enter trades way too early. You're usually taking a hugely crap risk to reward. You're probably risking like 5% to make like 2%. It's stupid, you shouldn't be doing that. And how many times on a FOMO trade have you brought the top or brought the bottom and then prices just reversed on you straight away and you just wish you did the opposite? That would have happened to you so many times. I know that because it happened to me so many times. And the crazy part is FOMO actually starts to begin in many traders after a good setup was there, meaning that you ignored your original setup, then emotionally entered a now crap setup just because of your emotions. And usually you'll just see poor entries, you'll be exhausted, you'll have just stress constantly, your exits will be super impulsive, you won't be targeting any sort of level, you're just focusing on the money. And your execution is just going to be all over the place. It's impossible for you to track anything because the trades that you're taking with FOMO were never planned. They were never meant to be taken by you, but you took them anyway. So how do you actually stop FOMO? Because that's the most important part. I've broken it down into four steps that I use myself. Rule 1 is you need to accept that you're going to miss trades. For a lot of you, you're working full time, you're in college, you have a life outside of day trading. You're not going to be there on the charts every single day, every single hour, waiting for these setups to appear. You can't do it, it's physically impossible. So if setups appear and you're not on the charts and everything's passed, don't then enter late. Just accept that that setup is over, it's gone. You will find another. The market rarely closes. The weekends, maybe on a bank holiday. Apart from that, the opportunities are endless. The market's always going to move. So if you missed a big move or you missed a move or you missed a setup, it doesn't matter. Just wait it out until the next day or the next week or even the next few hours. One of your setups may appear when you're more ready to take that trade. Rule 2 is you need to focus on the process, not individual moves. I can barely remember the trade I took yesterday, the trade I took 3 days ago, the trade I took 5 days ago, because I don't focus on each individual trade. I know that the trade I take follows my system. I do not enter otherwise. But I base my results off a month, off 3 months, off a year. I don't base it on individual trades. Because what, if I took a loss yesterday, does that mean I'm a shit trader? No. Because I might have taken 10 wins all before that. So you can't base yourself off the last trade that you took. So focus on the process of following your plan, of doing everything right, and the profitability will follow. If you don't, if you just focus on what's in front of you right now, every single day, then you're never going to get anywhere. And rule 3, I hope you have these already, but if you don't, you need to have clear entry rules. You need to have clear confluences. Obviously, your strategy is your strategy. I'm not going to tell you the rules that you do and do not need to enter a trade, but you need to know them. If you don't know them like the back of your hand, then you need to figure something out because that is what's wrong. You don't actually know when and how to enter a trade. So understand what strategy you're using and pick the confluences that you need and that you trust to enter trades and write them down and have them in front of you every single day. And if you can't tick it off every single one before entering the trade, then don't enter the trade. Say there's 3 confluences that you need to have hit. If only 2 of them get hit, Don't take the trade. If 3 of them do, take the trade. It's as simple as that. It's hard to do, but it's simple. And rule 4 is just to remember this. There's always going to be another trade. There's always going to be another setup. But you're not always going to have the capital that you have in your accounts at the moment. Because if you do let FOMO get the better of you, you're going to blow these accounts. You're going to lose so much money. You're going to blow prop firm accounts. There's always going to be another trade, but there's not always going to be capital in your trading account. And more times than not, the good setups appear after you've blown your account. So at the end of the day, FOMO is basically fear disguised as urgency. And you are basically becoming emotionally scared of missing these opportunities. And that just makes you take trades that you really shouldn't be taking. And I know you've heard this time and time again, but trading rewards patience. It doesn't reward impulsive decisions. And the traders who last the long term, who end up doing it for years, who make good money from trading, aren't chasing every single move because they know, we know, that there will be another move, a bigger move, a better move, a more probable move that will happen in the future. So why risk your capital on that crappy little move that you're getting FOMO about getting into? So if you really feel like you need extra help with your trading psychology at the moment, I currently am doing one-on-one coaching calls. So if you want to book one of those, you can join my Telegram, Instagram, TikTok, message me on any of those platforms and we'll be able to get something booked in for you. You can also book it in on my website. So thank you very much for watching this video. If you liked it, please feel free to like and subscribe, and I'll see you tomorrow in the next video.